In Sri Lanka, if I talk generally about corporate sector, ESG has been increasingly getting that importance, and it's now become a strategic priority. So while all corporate sectors are focusing with different areas depending on the sector per se, financial services sector is in a unique position where they not only look at their own ESG practices, but they are also focusing on the ESG practices of the borrower.
ACCA has always taken an agenda based on research, right? So they did a research report which identified 7 core priorities for the profession, which were economy, talent, sustainability, regulation, public sector, small businesses, and trust, right? Out of these, they took 5 and said every member, every student should develop their careers according to these 5.
Now, when you compare the financial reporting and the sustainable reporting, the key difference is financial reporting is a post-mortem thing that we do. It's a historical base.
Yeah.
But sustainability, we are looking at future perspective, short, medium and long term, that defined by the organization planning cycle. So we have to look at the material sustainability related risk and opportunities, impact to the organization, cash flows, access to finance, cost of capital over that time period.
Global accounting body ACCA has championed reporting on the sustainability of organizations for years. ACCA now plays a crucial role equipping its members on ESG, or environmental, social, and governance skills, so they can be more effective and relevant as leaders in organizations. 3 of ACCA members are here with us in the studio to discuss Sri Lanka's ESG landscape and its future. So we'd like to welcome Ranjani Joseph. Ranjani is a partner at KPMG in Sri Lanka. We also have Sampath Jayawardena. Sampath is a director for climate change and sustainability services at EY. And we have Aruni Rajakarier, who is the founder and a director at SheConsults. So thank you everybody for joining Echelon, Ranjani, Aruni, Sampath. It's great to have you here. I'll start with you, Aruni, right? You've been in ESG related work for a long time, for a decade or more. In that time, what's been the level of adoption on ESG in corporate Sri Lankan reporting, and what are the trends that you're seeing, Aruni?
Okay. So my first introduction to ESG reporting was when I joined ACCA as the country head. And we were running the ACCA Sustainability Reporting Awards.
Right.
And that was the only award at that time. And in ACCA's comprehensive manner, we were not only doing the awards, we were supporting preparers of reports with capacity building, like workshops. But, once a year or something, a workshop is not enough to really build momentum. We were talking to companies to come into the fold and do more. And at that time, it was really only GRI. At that time, it wasn't even a standard. It was a framework. So I'm talking 2005, when ACCA had its first award program.
And assurance was not a normal thing at that time.
No, and assurance was actually done by DNV only, right?
Correct.
They were the only ones who were doing assurance at that time. And it was very new to the country. So I think ACCA played a key role in bringing Sri Lanka, which is still a voluntary market, and it's an extremely interesting case study because we've got the numbers that a lot of other markets don't have without ESG being mandated.
Yeah.
So I think that in itself is like a tribute to the impact that ACCA has had in Sri Lanka. And over the years, we did direct education through CEO breakfast meetings and so on. GRI, when they set up office in India, we brought them over here as judges and did capacity building workshops with them. So ACCA has been at the forefront of promoting sustainability reporting in this market.
Sure.
And then you saw the standards evolve. So for 10 years, I think till about 2010, it was only GRI. That was the main standard.
I think we'll define what GRI is,
Okay.
Global Reporting Initiative. Where does that come from?
It's based in the Netherlands, and it's a stakeholder-focused standard, right? Very important to differentiate from the current move of IFRS, which are investor-focused standards, right? So it's a mature standard now. GRI is 25 years. They celebrated 25 years last year. So it was built on that, very comprehensive. One of the most, criticisms leveled at the burden of implementing GRI was how comprehensive it was. But materiality was always the answer to that, right? The true understanding of the fact that you don't have to report on everything. You have to report on what is material. I think only now that this is beginning to be understood.
Yes.
So those are the trends. And yes, we saw the big four take an interest and move into assurance. So that's been a big help, because though ACCA had in its syllabi the ESG reporting, until there is implementation in the country and there is like a critical mass of students who are actually living this and practicing this, the big four coming in made a huge difference to the credibility.
So we have two representatives from two of the big four. Sampath here is from EY. Sampath, you're overlooking climate change and sustainability services as a director at EY. Can you talk to us about your interaction with corporate boards, particularly listed ones, and the sensitivity they have towards the challenges Sri Lanka in particular faces around climate change and sustainability in general?
So, Shamindra, now climate change is a subset of the overall sustainability, right? So, sustainability is how you define sustainability first. It's the meeting the needs of the present without compromising the needs of the future generation. That's the golden definition given by the Brundtland report in 1987. So more than 37-year-old definition, but it's the golden definition. We still use it as of today. So the company's approach to sustainability in various ways. The mindset of the earlier leaders is like, if we achieve our KPIs, the key performance indicators, the bottom level targets or the top level targets, the revenue growth or the profit growth, then we will contribute to the societal and environmental initiatives. That was the mindset that initially, it's like about giving back. Right. So sustainability is looked at as like a philanthropic activity.
So this is beyond shareholder wealth maximization.
Yes, absolutely.
As the goal of an organization.
But that mindset has got changed over the period. Like from Aruni mentioned, like initially 2000 period, we had only the GRI reporting, but now the landscape has changed. Now the organization says, the leaders are saying, we are successful because we are contributing the society. It's about creating the shareholder wealth, shared value. Now with that, we come to the climate change. Now why this climate change topic is a very hype today is primarily due to the 2018 Samindra, the Intergovernmental Panel on Climate Change, IPCC, United Nations Scientific Arm, published a book, publication saying, okay, what will happen if we do not meet the climate goal, which is the 1.5 centigrades goal by end of this century, right? So they have highlighted that the human-induced climate change has increased over the period. And we have to take immediate actions to stop that, right? So in that report, it highlighted that we have to reduce our GHG emissions, the current GHG emissions, by 45% by 2030 in order for us to meet the net zero target by 2050.
Global greenhouse gas emission.
Yes, global greenhouse gas emission. So that has the scope 1, scope 2 and scope 3 emissions categories. Now, as a country, we have given our pledges to the United Nations by a signatory to the Paris Agreement that we will become, like for example, Sri Lanka become carbon neutrality by 2050. So corporate country alone, a government alone cannot achieve that target. So corporate has a responsibility. That's where the standards are coming up, sustainable reporting standards. So initially, 2015, the central bankers and the finance ministers of the G20 countries came together and say, okay, we need to do something on the climate related. And they said, okay, that they have entrusted that task to the Financial Stability Board, FSB, to create a framework. And they took 2 years from 2015 and 2017, they came up with a framework that is called the Task Force for Climate-Related Financial Disclosure. We use the shortened term TCFD.
This is a Sri Lankan initiative you're talking about.
No, it's a global initiative. It was primarily focused at the US market at that time.
Sure.
So US embraced that framework in 2017 and gradually, globally, the other countries has embraced that framework for climate reporting purposes. And then the landmark change happened in the sustainable reporting during the 2023 period, where the IFRS Foundation has developed their first set of standard. We call it ISSB standard, International Sustainable Standard Board. So they developed the first 2 standards, IFRS S1 and S2.
Oh.
So S2, IFRS S2 mainly focused on the climate-related disclosures. So now all the countries who have adopted this, the financial reporting standard, IFRS financial reporting standard, they are gradually adopting this standard. At the moment, there are about 30 countries adopted, including Sri Lanka. So this standard has a wider scope, right? And it requires governance, board level involvement in managing these climate-related risk and opportunities. So that's where the board role is coming up. So board has a significant role play now at the moment.
If I may add to that, the European Commission came up with the European Sustainability Reporting Directive. That may impact us even more than the IFRS standards, which is a reporting standard, because it has the potential to close access to European markets. That is the urgency as a country.
Got it. I'll come to you, Ranjani. Now, in your experience, and you're in assurance services as a partner at KPMG in Sri Lanka, right? And you particularly deal with financial institutions, the banks and the finance companies, right? Can you talk to us about the sensitivity of strategic leadership in these organizations, particularly in banking, with these emerging trends in sustainability reporting? And it looks like these are no longer good to have reporting. This is, you have to integrate practices into your organization. So you have to fundamentally change your organization before you can report anything.
So in Sri Lanka, if I talk generally about corporate sector, ESG has been increasingly getting that importance. And it's now become a strategic priority, as Sampath mentioned. So while all corporate sectors are focusing with different areas, depending on the sector per se, financial services sector is in a unique position where they not only look at their own ESG practices, but they are also focusing on the ESG practices of the borrowers.
Right.
So that's a big difference there. So if I generally start about the environmental initiatives, banks have been taking these initiatives over a period on energy saving, waste management, and also they have been promoting various wildlife protection projects and so on, but now very much into green bonding. So we recently saw DFCC talking about the first listed green bond. Other banks are also working on it. And it's interesting to see how SEC has set up the framework calling the innovative financial instruments, giving equal platform for people to trade on that. So that framework actually is encouraging banks to move towards it, because the proceeds are going to be used for renewable energy.
Yeah, so I think let's quickly define what a green bond is when a bank issues such. What is the purpose? What does it do?
So it's actually raising funds to reinvest in environment-related initiatives, especially on renewable energy.
Sure.
So Central Bank also came up with guidelines in 2022, again giving framework, encouraging banks to move. So it is quite an encouraging path now, where banks are moving towards these areas, and then that's what we see in the neighboring countries as well.
Sure. So for a investor in these bonds, besides the fact that your investment is being on lent for projects with a sustainable outcomes in mind, what about returns? Are returns market priced? Do you usually
actually the SEC's initiative is such that this will be equitable to any other bond. The only difference being the proceeds being used for environment-related initiatives. So it's actually giving credibility for investors. So that's more from the environmental side. On the society-related initiatives, banks have always been involved in employee well-being, society-related or community development-related initiatives. And there are lendings to specific SMEs and so on to look after the community more. And we see that focus increasing the importance at board level now. On the governance side, financial services sector is anyway governed by quite stringent regulations, both from SEC and Central Bank on corporate governance codes. Banks are also looking at ethical practices at board level, how they look at inclusion and independence of the board. So on the governance side, quite a bit is being done now by the banks, and thanks to the regulators making it quite stringent. So overall, I think the financial sector is sort of progressing well. And looking at the lending practices, they are again developing various frameworks to assess the borrowers, to see whether the borrowers have the necessary practices, and then giving a bit more, maybe incentive to such borrowers. So overall, we actually see at leadership level, this is becoming a strategic priority.
So Aruni, we've spent a little time here at the outset talking about both the approach to sustainability by mostly the private sector and also the changing landscape, regulatory landscape and the reporting landscape. I'll ask you to talk about ACCA's global ESG strategy. How does that fit what's taking place globally and in Sri Lanka at this time?
Okay. So ACCA has always taken an agenda based on research, right? So they did a research report which identified 7 core priorities for the profession, which were economy, talent, sustainability, regulation, public sector, small businesses, and trust, right? Out of these, they took 5 and said every member, every student should develop their careers according to these 5. These 5 points are, so the theme is accounting for a better world, right? What we should be doing is driving the sustainability agenda, number 1. 2, understand the benefits of AI adoption. Promote importance of good ethics. Advance an inclusive workplace culture. Develop a learning mindset. So this is professionally what they're advocating members and students to do. And then it's backed up by a whole lot more explanations and stuff. But quite apart from that, their syllabi have changed. They have a separate certification on sustainability reporting. And you have to understand the difference between reporting, which carries with it liability, legal liability for those charged with governance, i.e. the board of directors, right? So the same responsibility that the board of directors have in preparing financial statements, now with IFRS and IFRS 1 and 2 coming in, it becomes the same for non-financial reporting, right? So you have to make sure that your internal audit, your internal processes of scrutiny evolve to ensure that the data that is being published in your report is checked, double-checked, and then assured. And changing that mindset comes through, like I said before, it was very important that the Big Four came in and they were training their staff, who then take the message to the world, to the corporates, which form their alumni, which is manned by a lot of their alumni. So that change in mindset from just, let's put a figure, 4,000 is right for the number of employees. No, it should be 4,024, which is verified, checked, used for allocation of resources. Fundamentally, the idea that resources are finite, we're breaching tipping points. And that's why you remember the days when water was free, right? Who paid for water? It's no longer free. Now imagine the day that air is not going to be free, right? The importance of market pricing is one that needs to come out of this. And yes, we understand not everyone can afford these resources. So then how do we share that? And how do we optimize use and eliminate waste? I always think if you take the current business model and look at sustainability not as a strategic philanthropy exercise, which adds cost, but if you look at it as, let's eliminate the waste, let's make our processes more efficient, you will see that sustainability adds to your bottom line. And when we convince boards of that, they will be on board.
It's interesting to see how the younger generation is very much focused on this. And that's quite an interesting trend. And they're very supportive of these ESG initiatives, both in their organizations and on a voluntary basis.
But now, my problem with initiatives is exactly what they said in the opening speech when they launched the IFRS standards. We want to do away with this alphabet soup of initiatives. Get to doing what matters, what affects your supply chain, what affects your stakeholders. Focus it on that and learn how to report what is material. Boards should be looking at that.
It's about embracing sustainability genuinely into your business practices to create the shareholder value. It's not purely about reporting. Reporting is a very narrow angle to sustainability. Because now I think the people are very much focused on reporting rather than embracing it into your corporate strategy. That's what needs to be happen.
To some extent, that may change with the adoption of S1, S2, because now it's flowing into the financial statements. People will have to build it into their business processes.
Exactly. I mean, the disclosures are so specific. Like for directors, it asks, what are the skills they have to support this? How and how often do they review sustainability? So when you ask such very focused questions for disclosure in annual reports, they're going to have to fulfill it.
Just by way of background, the S1 and S2 we are referring to here is coming from the new IFRS sustainability standards. And Aruni is talking about how it sort of makes those in charge of governance, directors in particular, sit down and think about their participation here because they have to disclose that
Correct.
and sign off on on the compliance with the standard.
Absolutely.
Especially when you are embracing sustainable reporting standard, the tone at the top is very important, Sarvendra. Yeah, you can't ask the junior level team members to adopt sustainability if you don't have the top level backing.
Right.
Yeah. And the information, you don't have to manufacture it, right? In any company, information is like a pyramid, right? The bottom half has a lot of information that the board never sees.
Yes.
So the art here is to get in and put those processes to drive that information in a meaningful manner to the board.
Yes.
Right.
But now it's not going to be just a disclosure by the board. It's going to be audited as well.
Yes.
So
which
with audit
means-
trails.
Yes. Correct.
So I'm coming back to something you mentioned in your opening remarks, Ranjani, and that is that you talked about the financial sector, and in the financial sector, a big stakeholder is the customers of the financial institutions. You banks or financial institutions lend to these businesses, and then a big impact on their on the bank's sustainability is what's done with this cash. How is it deployed? Is it deployed in a way whilst also meeting business goals that also meets sustainability goals?
Yes.
Right. Can you talk to us about the evolution of this landscape? Because credit out there is an enormous amount of money. I don't know whether you have a figure off the top of your head what outstanding credit in financial institutions is, possibly not, but it's an enormous amount of money. How is this landscape likely to evolve?
So now that the various roles being played by different accounting professionals in this whole thing to support financial institutions. So as we discussed, it's not just reporting. So how do you bring credibility and integrity into the reporting?
Sure.
Now, this means not only the bank's initiatives and the projects, when they lend, what does that mean to their policy? If I give an example, if you are lending to, we'll say, a power sector, what does that mean to the environment?
Sure.
Is it aligned with banks' policies? If not, what is the impact, and is the borrower measuring it, and how will that flow into the financial statements of the bank, especially with S1, S2 coming in?
Sure.
So to bring that framework, I think in my opinion, we are still in the initial stages. As Aruni said, data is everywhere, but whether it's in a form which can be measured and reported in a credible way, which can be audited with audit trail, maybe we are not ready at this point. So currently the financial institutions are working on it, because I am aware of various banks working on gap analysis of what they have now and what they will require when they adopt the standard next year.
Who should be taking responsibility for this? As you say, the data is out there.
Yeah.
This is not about sustainability in the first place, but this is first understanding your impact.
Absolutely.
Right? And then you can decide how you want to change that.
Correct.
Whose responsibility is that?
So definitely it's, I would say, the leadership at the board level, the importance of setting up the processes and the controls should be driven by the board level. I also think there is a significant role that the finance team is going to play, at least in the initial stages, in holding hands with the relevant business units. Because the business units may not really understand how their actions are flowing into financial statements. So to interpret that, the finance team will play a very vital role with data analytics, performance management, and then how do you actually convert the strategic initiatives taken into financial impact? How do you really measure? At the board level, people may look at only the initiatives to be taken or the priorities.
Sure.
How it will flow into financial statements, how do you measure it, what does that mean in relation to the regulatory compliance or the reputational risk? I think the finance team is going to drive that,
Right.
at least in the initial stage.
Right.
And then, of course, to interpret the complex regulations and various requirements to comply with, in addition to what the banks already have. I think finance, compliance, and the business units, it's a joint game.
Yes.
Sure.
In my opinion, I think finance will take the initial lead, at least for the first 2 years.
Sure. And I can see the practicality of doing that. But this also may suggest that, hey, at board level, we are not fully versed with the changes that are taking place. That doesn't bode too well. Or is this a growing pain? What do you think about that? Can I start with you, Sampath?
Yeah, actually, it's a learning curve for all, because this, especially with the new standards coming up, all has to learn what is the requirement of this standard. And there's a lot of capacity building is required. That's where I think ACCA is coming in. So because the ACCA has a lot of thought leadership and the materials available for you to read yourself. And even there's a course, sustainability course there. You can register yourself and learn this stuff. And that's where the initial start with the top. And then you have to cross-functionally, you have to build up the capacities to meet. Like Ranjani mentioned, yes, finance team has a role to play initially, but later it will be a cross-functional duty. Sure. You can't bounce the ball to a one person or one team and say, yeah, look here, you have to do this reporting. It's a cross-functional effort, Samitra.
Aruni, you talked about that early era when ACCA introduced the Sustainability Reporting Awards. The GRI standards were introduced to Sri Lanka. It looks like we are again at a threshold similar to the one that perhaps you first had with sustainability reporting or integrated reporting being introduced into the landscape. It looks like ACCA can play a pivotal role in this changing landscape.
And they do. So, I mean, I've done webinars for them, like with 20 odd countries participating.
Right.
And you're talking over 500 people on the webinars, right? And these are supported by tools that ACCA has developed. They have a number of initiatives, and if you just follow the publications and the sites, event calendars, they do offer a number of things, and at every level. So they actually have a really great document which tells what needs to be done to implement it in your organization, addresses the responsibilities of the people concerned. I think it's really important to understand now the full name, Sustainability Reporting Standards. When you look at the standards, what they're describing is sustainability-related risks and opportunities, climate-related risks and opportunities. It's no longer this nice to have. It's about the risks that are confronting your business now. And the standards talk about 4 time zones, right? The current, here and now, what happened last year. Short term, medium term, long term. You have to know on 5 points where you stand for every sustainability related risk. How does it affect your access to capital? How does it affect your cost of capital? How does it affect your P&L, your balance sheet, cash flow? Right? So 5 things to know about every sustainability related risk or opportunity across 4 time zones.
Right.
Right? That business leaders must understand how valuable that information will be to them. If they understand how valuable it is in navigating their businesses forward, they'll be on this faster than the management. They'll be driving the management.
Sure. I think sustainability is now, when you compare the financial reporting and the sustainable reporting, the key difference is financial reporting is a post-mortem thing that we do. It's a historical base. But sustainability, like Aruni mentioned, we are looking at future perspective, short, medium, and long term, that defined by the organization planning cycle. So we have to look at the material sustainability related risk and opportunities impact to the organization, cash flows, access to finance, cost of capital over that time period. So that's the distinction. And one other thing also, now we have seen a keen interest in the audience of the sustainability. Now, previously the sustainable reporting was discussed at the sustainable reporting manager level and so on. Now we see a diverse designations, diverse positions are interested. For example, CEO level, C-suite level, now they discuss on sustainability risk and opportunity, how it's impact my business operation, and how we can mitigate those risks, or how we can better adapt to those risks, and how we can take the benefits out of the opportunities. Yeah.
So that's actually coming with two important factors, I would think. One, the adoption of the standard per se, because previously it was non-financial information. It was outside. So although, yes, board took responsibility for the annual report, the main focus was on balance sheet and the financial side. And this is like a qualitative disclosures. Now moving into financial statements, I think the boards are understanding the importance of the need to be involved. And they are actually asking questions, what does it mean? And how will this flow into the financial statements? And you actually asked about the ACCA, while Aruni touched on many areas. I would also say the ACCA syllabus, the revised syllabus, actually touches on sustainability topics across all subjects. So which is actually building the young professionals with the full awareness of what does this mean, and how do you interpret it, and how do you implement it? So I think ACCA in that way is very focused on the development of the young professionals.
Even after obtaining the membership at ACCA, there are continual professional education, CPT or CPE courses available for you to learn, and you have to enhance your knowledge on sustainable reporting.
And the relevant tools are available.
Definitely, yes.
So what I think the standards do, Shamindra, or sustainability reporting does, it removes the complication of price from your financial statements. If you strip the financial statements of price, you'll see how the other resources interact. The supply-demand dynamics of your raw materials, of your energy, of the talent availability, and everything else that goes. You remove price, and now you're suddenly seeing you need to manage the resources before you manage the price. And to me, that's very simply sustainability. Do you have sufficient raw materials available? What's your lead time? That, how much of emissions? And if you looked at before the pandemic, right, customer was undisputably king. During the pandemic, suddenly the suppliers became king, because you could deliver to your customer if you didn't have your supply. So you see the change in dynamics. Along with our financial crisis, we saw the migration of talent, right? And with the migration of talent, the employees became, So governance is about managing the interests of stakeholders. And you realize more than ever right now that you need all your stakeholders balanced, invested in your organization. If one falls out, including the community, if they object to your presence, you can't function. So how does the board get information on the opinions of the stakeholders and the resources they have to manage these stakeholders to their iPad or whatever they consume board papers on?
And Aruni, as you said, it's no longer limited to your jurisdiction. It's moving out, because if you're sourcing goods from EU, then you might as well fall in line with the EU rules. And what does that mean to your supply chain overall? Or if you are importing from or you are exporting to EU, it's the same rules. So it's now a wider picture, moving into the business processes fully.
And the reason for S2 is the huge impact of climate change. The desertification, where there is water-intensive agriculture, right? And the need for energy to reduce the emissions, that is so urgent, because we are vulnerable to all this. Maldives is already seeing the rise of sea levels, right? The hotels have to, elevate their water villas and so on. Spain had, I think they lost 1/3 of their crop due to dry weather. France had to shut down the year the war started. France had to shut down half their nuclear plants because the temperature of the river rose during a 6-week heat wave, right? So the rivers were used to cool the nuclear reactors. You had to shut that down. California, where they have big, beautiful houses, the houses are not being insured because of fire weather, right? These are realities that were predicted for the future. They're happening now.
And now I'll ask each of you to take a minute and perhaps wrap up, right? Can I start with you, Sampath? Final thoughts.
In climate change, it's a fastly closing window of opportunities available for us now.
Sure.
So as corporates, as citizens, as governments, we have to take this opportunity forward. Like if we do not take this opportunity now and take actions while complying with these standards and so on, the future generation will blame us. So it's a responsibility for all the leaders, including the board of directors, to take action now. Don't postpone it to tomorrow. Take action now. Build a sustainable development within your organization as contributing to the country's development.
And Aruni?
Transform your business and make it future-proof, future-resilient. There is a tiny window, but you've got to do it. Imagine if the cost of energy was too high to transport tea from the hills to Colombo. Where would we be? So it's that fundamental. Ask yourself the hardest questions and make your organizations resilient.
So while Sampath and Aruni touched on what should be done, I'll just talk about what is being done. We actually see encouraging signs of boards getting involved. And my plea to the finance fraternity is basically to help the boards in the respective organizations to go on this journey in an effective way. And we as assurance providers are also there to support everyone. And I think the journey has already started, and we see the right path in front. So we are quite optimistic about how things will change to fall in line with not just the standard requirements, but in the real practice.
This is a conversation I think that anybody can follow along with who are working in the private sector. So thank you for...
And you can see how engrossed we were.
Yes,
exactly. Indeed. Ranjani Joseph, Aruni Rajakarier, Sampath Jayawardena, thank you for joining us.
Thank you very much.
Thank you very much.
Thank you for having us.